Los Angeles fires highlight risk of uninsurable future. Experts say many insurers reduced or ended policies in California before the wildfires. Soon after wildfires broke out in Los Angeles, California, earlier this month, Jewlz Fahn received a panicked call from her husband Terry, telling her they needed to evacuate their home in the Pacific Palisades. For some reason, I wasn't thinking clearly. I grabbed a pair of shorts because I was like, well, it might be hot later today, Terry Fahn said. I was thinking about packing more, but I was like, we'll be back, and that was a mistake. The couple lost their home in the fire and nearly all of their possessions. While they wait for a rental property to become available, Jewlz and Terry are now living in a hotel room with their dog Coda. Jewlz and Terry Fahn make up one of thousands of Los Angeles households seeking to recover their losses after the devastation. The fires destroyed more than 13,000 structures, contributing to more than $250 billion in total damages, according to weather forecasting service AccuWeather. Insurance companies typically fill the gap, helping homeowners overcome their losses and rebuild their homes. After a natural disaster of this scale, however, questions abound over whether residents will be able to access the funds they need. It's a nationwide trend amid increasingly frequent climate disasters that some experts say could lead to an uninsurable future. Jewlz and Terry Fahn said they will need to file a claim under the FAIR Plan, the state's insurer of last resort. According to state officials, the number of policies under the FAIR Plan has more than doubled from 2020 to 2024. The FAIR Plan offers more expensive coverage than many of its private sector counterparts, while providing limited coverage. The Fahns had to sign on after State Farm opted against renewal of their fire policy last fall, just a few months before the fire destroyed their home. I just couldn't believe it. We've been a State Farm customer for more than 20 years, Jewlz Fahn said. We paid on time. We never made a claim. There's no reason for them to drop us. It's just unfathomable. The couple became concerned last March when State Farm announced that it would not renew 72,000 policies in California to ensure its long-term sustainability. Then in July, they received a letter from State Farm saying the insurer was canceling their fire coverage because of substantial wildfire hazards. The Fahns were notified that their policy would expire October 14, 2024, less than 3 months before the fires broke out in Los Angeles. In a statement to ABC News, State Farm said that its non-renewal decisions were not made lightly and only after careful analysis of their future capacity to serve their customers. In a letter to the Fahns that they provided to ABC News, State Farm cited substantial wildfire hazard as part of the reason behind the decision against renewal of their fire coverage policy. State Farm also said they understand this is a very difficult time for those impacted by these wildfires, and that they are on the ground helping our customers recover. Additionally, they said they have already put more than $500 million back into customers' hands since the start of the fires this year. At least 10 major insurers have either left or reduced coverage in California in the past 4 years. During that time, the number of homeowners signing up for the state's insurer of last resort has doubled, officials said. In the past 2 years, insurers including Allstate, American National, The Hartford and State Farm stopped issuing new fire policies for California homeowners. Sean Kevelighan, CEO of the Insurance Information Institute, said insurers face no choice but to drop policies in California, since regulators prevented the companies from raising rates enough to account for the growing wildfire risk. Insurers absolutely want to be doing business in a state like California that is one of the largest economies in the country, Kevelighan said. But when they're forced to underwrite in a way that simply is not profitable, they have to send those non-renewal notices. Even amid the growing climate risk in states like California, the property and casualty insurance industry earned record profits in 2023 totaling $88 billion, according to the National Association of Insurance Carriers, or NAIC. Last year, the industry far exceeded that record, bringing in $130 billion in profits over the first 9 months of 2024, credit rating agency AM Best found. They're supposed to be a risk-bearing industry, but now, even the slightest hint of what might be a new risk, and they're walking away. Douglas Heller, Director of Insurance at the Consumer Federation of America, told ABC News. The insurance companies have bulked up their profits, even as they were walking away from our state and our communities.